Hey everyone, it's Mitch. The stock market is absolutely crushing it right now, and market sentiment could not be any higher, okay? And this is what's resulted in both the S&P 500 as well as the Dow essentially hitting all-time highs. So in this video, what we're going to talk about is a couple of things. We're going to first focus on what were some of those big business news stories that essentially transpired this week that resulted in the stock market reaching these all-time highs, and towards the tail end of this video, talk about where they think that the market is potentially headed. Before we get too far into it, do not forget to hit the like button for the YouTube algorithm, as well as subscribe to the channel, and let's get into it. So the biggest gains this week essentially happened on Monday, okay? And this, I know Monday seems like it was a long time ago. So the jobs report for March absolutely crushed expectations, okay? The numbers came in at 916,000 jobs for the month of March when the expectations were 675,000. And of course, this is non-farm payroll, and this essentially dropped the unemployment rate to a hair under 6%, which is what absolutely got the stock market essentially crunching and churning for this week. The second piece of good news that basically happened this week had to do with Tesla, okay? So the stock market was already running starting last week when the president essentially introduced his infrastructure plan, which had all of this commitment from a dollar's perspective as it relates to clean energy. And essentially you have this delivery report coming out from Tesla, which just basically amplified some of those that stock market run that had already commenced last week. So Tesla's deliveries came in at 184,800 vehicles for the first quarter of 2021, and the expectations were somewhere in that 175,000 number. Okay, and then you add on to that with further good news, which is the ISM non-manufacturing index. That beat expectations for the month of March. On top of that, you had job openings, okay? Job openings report came out with the actual number sitting at 7.4 million when the expectations were that the job openings report would only be at 7 million, which is further acknowledging the notion that more and more companies are hiring, and this level of positivity is also further driving up the market. And there's just really no shortage of all of this good news, okay? So Goldman Sachs then issues a report, and they essentially say that they're forecasting U.S. growth to be around 7.2% in 2021. And there's a lot of analysts who think that this number is still conservative. Some people are talking about 7.5%, 8% numbers. Some people are talking about 20% growth in earnings. So that's what's further influencing the stock market and pushing it to all-time highs. As people are getting hired, right, as unemployment is essentially creeping down, there's more and more money in people's pockets, which is resulting in incremental credit card spending, which is another positive indicator in terms of where the market is headed. And there's been a 12% jump in credit card spending from 2019 levels. Then there's also the FOMO crowd, okay? There's also the retail investor crowd, and they're investing based on margin like you wouldn't believe, okay? So some of these graphs that we're looking at from a margin investment perspective is absolutely crazy in terms of what's happening, and this FOMO or this retail investor crowd is also just pushing the market up. Then, of course, what's a conversation about the economy if we don't talk about the Fed? The Fed chair, Jerome Powell, basically came out in multiple instances this week and talking about how his focus was going to be on trying to trim down unemployment, essentially bridge some of this wealth gap. He was not going to slow down on any of the monetary stimulus, which basically means that they will continue to pump money into the economy and they'll continue to keep interest rates absolutely low. And what comes with this low interest rates? Well, what comes with these low interest rates is low mortgage rates, okay? So the home prices are overarchingly heating up all across the country, right? There's a clear supply-demand type of gap. People are essentially in a position where they don't even want to sell their house because they're worried that they won't be able to buy a new place due to all the competition that is out there, so they won't be able to get the type of home that they essentially desire. And of course, there's the great news on the vaccines, right? Which is absolutely very exciting for all intents and purposes. Vaccine velocity continues to rise, with now 1 in 5 or 20% of Americans being fully vaccinated, and 33% of Americans now have received at least one shot. So there's this research expert at FrontStrat, okay, and his name is Tom Lee, and he's come out on CNBC on multiple occasions over the last, 6 months, over a year or so, and he's been generally right in all of his calls. And what he's come out and said, and this is the terminology that he's used, he's called it a face-ripping rally, okay? A face-ripping rally is what he expects to effectively happen in the month of April, and after that there may be some level of consolidation that takes place. Now, since Monday, we haven't seen anything that would meet like a face-ripping type of definition definition, whatever that definition is, but it, relatively certain that it would be fairly intense. It hasn't happened Tuesday through Friday, but the market has steady but surely just been moving up, right? It's been slowly like bleeding up, if you will. And some of this energy is also being felt in the crypto space, okay? There's a lot of optimism around Coinbase. Coinbase is an exchange that's basically going to be going public next week, and they released some numbers this week, which was absolutely earth-shattering. Ethereum is gone over $2,000 a coin at this stage of the game, and that has something to do with the positive news that came from Visa as well. So when it comes to cryptocurrencies as well as some of the other stocks that we've talked about, everything is essentially moving up. This positive news has been so overwhelming. There has been some negative news that has also come out in the market this week, okay? But the positive news is just overwhelming, that it's just completely shunned or muted this whole negative news. And some of these negative news that's basically happening is quite significant. For example, the US Producer Price Index, these numbers were just released today, and those numbers were greater than the expectations by the economists' expectations by over 0.5% point, okay? So what this basically means, this Producer Price Index is usually an indicator of inflation, okay? What this means is this is how much cost it is to produce a particular good, okay? So when those costs are essentially going up, eventually those costs will get transferred to the consumer. We talked about jobs earlier, right? The jobs report for the month of March came in very favorably, and people are expecting at least like 1 million jobs to be added every month here going forward. But with that said, on the adverse side, unemployment insurance numbers came in higher than expected, with the numbers sitting right around 744,200 when the consensus estimate was supposed to be around 694,000. On top of that, there's been some new strains of the coronavirus that is basically out there as well, and it's resulting in several countries continuing to shut down now, and some of those strains even coming into the US. But that is not enough to basically shut this economy down, okay? This thing is still running, and it's running hot. There's so much positive news around vaccines and things like that, at least with some of the existing strains. But the WHO essentially released some statistics that basically said that only 0.2% of the world's vaccine supply has gone to poor countries. So in order for this whole economy, right, globally, since it's so like interrelated, for it all to go up, we need this vaccine distribution to go across the globe, right? And then of course there's the wealth divide, right? I basically alluded to that earlier as well, but that wealth divide is essentially a real thing, right? But there is this meaningful proportion of the population that is in fact struggling, okay, that they do not have necessarily the accesses that are effectively needed, and that is why there is a slow but sure increase in default rates as it relates to automobiles. And then there was some news around the Chinese incursion into airspace for Taiwan. Typically, this would have been a bigger deal than what it really was. Now, it was covered in the news, but it did not stop the roll of the stock market, okay? The stock market started slightly negative on that day, but then it just moved right on up. So where are we with the markets? Well, we've talked about it, right? The Dow and the S&P are sitting at all-time highs. The Nasdaq is only 2% down from the all-time highs that were basically happening a month ago. So what are so-called experts expecting, right? What are they expecting for this market? So there's a few things that people are really talking about, right? One, people are expecting absolutely bumper earnings. Secondly, people are expecting this to be a stock picker's market. Experts are expecting the economy to add at least 1 million jobs a month. Everyone's expecting rapid GDP growth. I've already talked about what Goldman Sachs has essentially put out there with a 7.2% number. There's pretty much no doubt that we're going to continue to see a dovish Fed as it relates to their policies. And now more and more people are starting to join the camp that there'll only be marginal or temporary inflation. And that is why the bond market has sort of like calmed down, and it isn't going through those massive bumps that what we saw in prior weeks. So if you have a different thought in terms of where this market may potentially be headed, definitely include those in the comments below. A quick note of caution here, okay, when it comes to these types of markets that we're in right now. So Warren Buffett has famously quoted by saying that, you need to be greedy when others are fearful. So this is the market that we are in at this stage, right? So one could easily take a position adversely or be a contrarian in this market, but that could potentially be very dangerous. But I just wanted to highlight this Warren Buffett quote since it seems to be very relevant at this point in time. So if you enjoyed the contents of this video, definitely hit the like button, subscribe to the channel, and ring the notification bell. Also, I do have another channel that I've started. Definitely look at that in the links below. It talks about more daily type of trades. It's not meant for the long-term investor. And that's it. I'll see you soon.
Just tell me what to